Booking.com is known as one of, if not the biggest, online travel agencies. The company was founded in 1996 and survived the dot-com bubble, unlike many others. The company has plenty of acquisitions under its belt that benefit them in the form of either revenues or even goodwill. Their stock sold off around 10% today after the company reported their latest results. Booking released their Q4 earnings recently, and not everybody was saying Booking.yeah. Some analysts believe that they gave a weak forecast for travel reservations. Others believe that the company will continue to experience obstacles with current world conflicts. Now, let's see what the numbers have to say in their most recent annual report. We can see that they are doing good revenue numbers year over year. What's a little confusing is how their operating expenses increased by a similar amount as their revenues did year over year. For example, their sales and other expenses increased by 38% since last year. They cite an increase in merchant transaction costs that helped expedite these costs. Another massive jump in operating expenses is their general and administrative expense. This saw a 102% increase year over year and can be directly attributed to a draft decision. When we traverse the report to discover this contingency, we find that they are facing investigations regarding competition law. What's important to note is that the company cannot predict the outcome of these contingencies, which investors find unappealing as investors love certainty. These contingencies offer too much uncertainty into how these outcomes can affect their finances, for example. From the chart, we can see that the momentum is still to the upside, although it wouldn't be unreasonable to see a pullback. An area where buyers may be looking to pick up the stock is the $3,200 zone. This would be an area of previous supply turning into demand, also known as a break and retest. If price were to keep going lower, we can see another test of the $2,700 zone. The stock attempted a retest of the zone recently, although it didn't pull fully into it. It will be interesting to see how the company continues operations despite macroeconomic conditions and contingencies putting pressure on their cash balance.